All right, welcome back. We were so successful last week with the bags, JFDI and GP video that we decided to do one again. And guys, thanks for hopping back on today. I think we had a great conversation that we kind of wanted to continue, especially GP with Netflix and how spot on you hit that breakdown in the streaming giant.
Yeah, that was I was expecting it, but I really wasn't. So to be honest, I didn't have any position puts or longs or anything going into earnings, but man, that was just brutal after losing already 200 and something points.
Yeah, pull it up and let's kind of go through what happened, what you already had in place, and then maybe there's some optimism for the coming weeks.
Sure. Let me.
And Nick, you got to admit, GP nailed this one. Like that was.
Oh yeah, man.
That was charted to the T, right?
For sure.
It's funny how sometimes they work and sometimes they don't.
Yeah, we like to pat ourselves on the back when they do, and then when they don't, it's like, technical analysis is chicken bones, right?
Yeah, and so I even looked at like puts in this conversation, but you can never think a 25% move is coming, right? Like if overnight, maybe it happens over the next week or something like that. So I was looking at like the 420 call puts in Netflix because I was like, let me run a straddle, right? Let me do the 420 puts and 620 calls in case I'm wrong either way. They'll be really cheap, 100 points out of the money or something like that. I'm not going to spend more than like 20 cents. I was starting to look at the calls and they were like 86, 87 cents. And I'm like, I'm not paying this. I should have paid it, but to me, that's inherently expensive for $100 out of the money. And it's 99 out of 100 times it's a waste of money.
Well, share your screen. Let's go.
Yeah. I'm just pulling up the chart. Sorry, I didn't have it open.
All right.
All right. Do you see my screen now?
We can.
Yeah.
Okay, perfect. So what you're seeing on the screen is the weekly chart, and you'll see that the megaphone pattern in Netflix is playing out. This is what I see on the weekly. You see a full back test of the entire range of 2018, I think it was. So I think I posted this a long time ago. I think it was in 2019 or 2018. You can check my stop puts. It was like, at some point in time, we're going to come back and retest this level because I think it was like 7 or 8 different iterations that it hit 386, got rejected, 386, got rejected. Sometimes it would overcut and then got rejected. So I was like, if we do collapse, this is definitely going to be the point where we find a bottom. And you'll see literally it tagged it and pulled right back up. So the one thing that you'll see on everyone's feeds and everyone's conversation is how oversold it is. Just remember the last time when we talked about this last week, it lost another 75% after this. That was a different time. Quickster was a different thing. That was a new streaming service that could potentially go bankrupt because they made a wrong decision. This is a legendary CEO who's always done right by his shareholders in the long term. So I don't think we lose 75% here. And as long as we continue to hold 386, it's a range. Netflix never trades to the exact pivot point. It's always a range. So I would say anywhere between 380 and 390 keeps holding. You have further upside here, right? You'll see there's a couple different peaks here and here of bases, small bases, but the massive base is what you're looking at here. So as long as it holds between 380 and 390, you have upside trades. But if it breaks that 380, it's going back to this 195 level. You see that level here?
Yep.
So that's where I have it. But I'm also not in the camp that the market has topped yet and is going to collapse yet. I think there's definitely signs of, we've talked about it, not necessarily on our videos, but we've talked about it on StockTwits and stuff like that. Financials are always the last leg in the bull market, right? Like it's literally the last leg. It's the one that, and financials in 2020, 2021 finally broke out of a 12 or 13-year consolidation. And they were beasts. I think Goldman Sachs more than doubled in 2021. And now they're starting to falter. So there's definitely signs that the market's maybe not coming to a catastrophic top, but it's going to go sideways, potentially down and all that other stuff. So you should be thinking about how you position your portfolios moving forward. It's just what I think. I don't know what you guys think here.
Yeah, I mean, I think there's a lot of catalysts, not just potentially what's playing out in Netflix, but I think there's a lot of catalysts just in the market this week. We have all kinds of earnings, right? I mean, some of the biggest names in the market are reporting this week, from Microsoft to Boeing to Intel to MasterCard, Apple, Visa, Chevron. All those companies are reporting to it this week. And then, of course, we have, the FOMC with Jay Powell, and the meeting on Tuesday, and then his presser on Wednesday. So I think we're going to see sooner rather than later, most likely, in my opinion. The market's probably going to decide what it's going to do coming through this next, 5 to 10 sessions, if not sooner. So I completely, agree. And this is a thing of beauty right here. And, I think what played out in this rendition of Netflix you have here could be what's about to play out in the market. And I don't know if you want to just jump in and share some more of this comparison that you had, GP, but I think it's very telling.
Yeah, maybe Nick wants to chime in as well here before I continue, but
sorry, I was eating a granola bar here. I guess I kind of wanted to, in my mind, I just try to think in terms more of like risk on or risk off. And I'm not really a too impatient guy. Like I subscribe to like the O'Neill style bottoming out, waiting for that follow through day. So I don't know. We can definitely talk like bases and like these pullbacks. I think quite a bit. I'm just in the like where the market's heading. I'd rather watch Amazon and probably Tesla here and see what direction they lead us.
yeah, that totally makes sense. I think so I took some long Amazon actually into Friday.
Sure.
It broke the box, which should act as a rubber band here. You're talking about a 2-year plus box or close to a 2-year box, and it broke.
Yeah.
And typically when it breaks, you should get out. But I was willing to take the risk here with Amazon because maybe it gaps down and it's down 100 points, and I'll watch how it closes on Monday, on tomorrow. But that's I think the risk reward setup here in Amazon was worth it. It's maybe 3 or 4% down, but if it behaves like the Amazon, like NVIDIA did, I think in 2020 or 21, it broke. So because I remember it so well, because I had an NVIDIA position pre-split at the time, was like, I think 510 or something like that. And it broke the box at 460. I got out because those were my rules. I got out, and the next day it gapped up like 50 points. And so I'm not saying Amazon's going to be in the same position, but I've been there before. So I just took the chance and I was like, oh, maybe I'll lose 3% on, or Amazon's most likely not going to gap down 10%, right? So I was willing to risk 3 to 5% to see if the thesis from a false move comes a fast move, right? So we had it.
Yeah.
We had it on the upside where it broke all-time highs and then rejected and broke down. Too bad it wasn't fast because it took 6 months to break down. But and that tells you the sheer size of Amazon, right? It's a 1.9, 1.8 trillion dollar company. It takes some time to break down. So
well, I think this goes into the sort of psychology piece that maybe we want to get into just in a little bit, but let's get through Netflix and then we can jump back into psychology of, you know, why we add to positions or cut positions where we cut them, etc., and just how we, you know, visualize why we do what we do.
Yeah, fair enough. So I'll just finish up Netflix. This is the chart I shared in last week's video. You can see after it broke this blue kind of mini support level right here, it just kind of cascaded. Same thing happened in Quickster here, and then you'll see that it just kind of cascaded down. So what you'll see in Netflix's candle with the, sorry, here, hold on, let me pull up the daily candle, is it's a quite a different candle. So I don't think it plays out the same way, but it's just something to keep on watch because all we really have is data, right?
Yep.
In terms of, sorry, that's not working. Hold on 1 second.
But no, you're exactly right, GP. And you know, that's one thing that I think that people who are new into charting and TA, right? They look at, well, my line never moved, my trend line never moved, or whatever. Well, you don't know what's going to happen in the future. All this is probability, and we want to set ourselves up for the best possible trade based on the data we have. Well, when you have new data, right, which would be a candle, a daily, a weekly, a monthly, what have you, that can change the way one looks at a chart. And you can't be so rigid to say, well, this is the one true trend line, when your trend line based off the new data could very well be false, right?
Yeah, absolutely. Yeah, you in a market that's fragile the way it's been over the last, well, I would say it started in 2017, 2018. Every move is exaggerated to the upside, to the downside, to the sideways. Like you got to be on your toes, and when you get new data, you can't ignore it, right? So you got to pay attention to it. But so what you're seeing here is the current Netflix chart is that it broke the megaphone candle, it broke whatever pattern, whatever you're looking at, it literally just collapsed. And what you'll see, to me, I know Cookie doesn't agree with volume, but to me, that was a ton of volume, and it still couldn't break the 388, 390 support area that was resistance for so long. And then you have a kind of a doji candle. So need to see what happens here. It could be a doji down. This is not a reversal candle. It's an indecision candle. It means no one knows what is going to happen here, and you need to see what it kind of positions down. So basically, if you're looking at this as a trade, under this low, it's a short. Above this, it's a long. And that's kind of how you have to play it here. And to keep 5-10 cent stops on something like Netflix is not a smart idea either, because it could easily undercut the lows by $1, a couple dollars, and then reverse higher. So you got to be prepared in a volatile environment to have wider stops. And how do you manage wider stops? You reduce position size. That's how you manage wider stops, so you don't get shaken out. But that's where I am with Netflix. No direction as of now. What you'll see, this candle versus The one that we had here, it tried to bounce and then just close at the very lows, and then it kept closing at the lows every single day for 5 days. So it's just something you have to keep in mind. We didn't get that kind of candle, so the pattern could potentially be a different pattern setting up.
We could, I mean, like you said, it's an indecision candle. We could be in a bottoming process, or it could continue lower, right? So we just don't know right now. I don't want to spend the whole time on Netflix, but I thought it was really important to go over this, since this was the chart that you left us with, and it played out almost to a T. So thanks, GP. Really appreciate the insight. And if anybody who listened took puts on Monday's market open, congratulations, you made a hell of a trade.
Absolutely.
So since we're all here and we have a little bit of time, and Nick already kind of jumped into some of the psychology, I say we just go straight to that route. For me, just looking at my behavior on Friday, I had stopped set on more recent positions. They hit my points. I sold out of them. It wasn't an emotional decision. It was like, okay, here's the downside of these stocks that I wouldn't mind to hold long term, but at the same time, I'm not going to write them down, another 7, 8, 10, 15%, right? Just doesn't make a lot of sense when you jump in early. It's the same thing as saying you're wrong, right? I took a bet, like, let's say on Moderna at 171, my stop was at 162. It fired, right? So I knew what that was. Same thing for Boeing, who last week we all liked Boeing as a breakout, and it did, but it was a failed breakout. It came right back down through those trend lines that I had. I'm not going to ride that back down another 20 or 30 points. There's just no reason to do that. I can enter into the position if I want to. And then on the opposite side of that, right, I took some new some more weight in Amazon. I added some more weight in Microsoft. I had a buy order in previously on Microsoft. When it triggered below 300, I was going to buy. So I watched for my opportunity to take it. Amazon, same thing. I bought early because that was a buy that I previously had in place. And then I bought later on toward the end of the session. So for me, I see not the losses as success, but I see them as mitigating my losses, which in essence is a bit of a success for me. And then I see it also as success as two positions that I want to just keep on adding to, in Amazon and Microsoft, the opportunity to buy in at much lower levels than have been given for almost a year now in Amazon, but or greater than a year. And then something, Microsoft has been on such a stair stepping up that I didn't know how much further I was going to get below 300 to add some there. So I see Friday for me, while nobody likes to see their account down, right, or turn red for a day or a week. I saw those as two opportunities, and in no means were they emotional decisions. But the selling that we got, I think, indicates some emotional decisions that were going on in the market. And Nick, I don't know, you started this earlier with GP. I don't know what else you want to add to how you viewed it, or how you see managing your position from a psychological standpoint.
Yeah, I know. I think it'd be kind of interesting to talk. We hear a lot about, taking a top-down approach and like what that means for a lot of people. For me, like, I love looking at the monthly and the weekly charts, and the way that kind of am like thinking about this in my head is like, all right, we had this crazy brain year 2020 where it was like you threw darts at a wall, everything worked.
Yep.
2021, like if you sold down positions, if you realized that the gears were turning or shifting and you needed to start buying support versus buying breakouts, you still probably did all right. But it was still relatively a frustrating year for a lot of people, which I think should be to be expected after the run we had in 2020. Now, like we wanted to see the resolution, the chop that we started to see of this last year or towards the end of this last year. I really wanted to see that resolve to the upside, not so much the downside, but I guess I'm just kind of in the camp that based on what we saw last week, this is more just getting started, not we're closer towards the end, at least in my kind of opinion. Because I think that on a technical, like looking at the charts, like I feel like the SPY 400 is going to act as towards like a magnet, somewhere between that 4 and 420 zone. Same thing on the Qs. And it like, again, like just thinking about this, not necessarily just looking at the chart, it's like, okay, are we like, what's the general theme of these days? Like, are we fading into the close? Are we, what direction are we gapping? Are those gaps being filled? Like there's a lot of like little kind of, I think little tells that kind of tell you, I'm sure everybody has their own kind of little things that kind of say, all right, hey, you start seeing these things, like it's time to step off the gas, like either stop putting on new positions or start trimming, or like there's anyways, that was just kind of my point. Like this isn't my I have no interest in like hopping into anything new, considering like the best looking chart out there right now, I think is the GLD. I don't know, just kind of my 2 cents in terms of like the style of trader that I am. I fall into much more of like a trend trading. Probably I just fall into it, probably a trend trading category. And so like I need a little bit bigger of a pull in. I want to see those, like I want to see a sustainable tradable bottom put in before, I don't know, I throw more cash.
For sure. I think that makes a lot of sense. I mean, if it weren't for, take my action on Amazon and Microsoft, if I didn't view those as very long-term positions for me, regardless of what they do over the next 3 months, 6 months, or a year, right? I want to be in those names.
Sure.
Some of the other ones, right? Like would I like to be long those names? Yes. Am I going to fight the trend? Absolutely not. And I don't think there's any question that we do have, bias to the downside. I mean, we have seen selling toward the end of the day nearly every day, right? And that's just sellers stepping in and, buy the dip, sell the rip, right? Whenever they sell it down, they're going to buy back in, and then they're going to do rinse and repeat for the next however many days. I think last week when we talked, I was actually surprised that you guys were a bit more optimistic than I was, but it doesn't take much for me to get full raging bull, really. So I get optimistic when I hear optimism, but at the same time, when do you know that the top is in, when the last bear turns to a bull? And when do you know when the bottom is getting close or the bottom is in, right? Is when the last bull turns into a bear. And that's what I've been doing over this weekend. Is I just been looking at sentiment across Twitter and across stock twits, and just about everybody thinks we're going to zero. Like SPY 400 seems to be like a given at this point. You know, J-PAL is going to completely tank the market on Wednesday if Microsoft doesn't do it on Tuesday and Apple doesn't do it on Thursday, right? Like, it just seems like it's inevitable, and the downside could happen. I'm not saying that we don't have further downside to go. I'm not making that claim at all, because I don't know. All I can do is, and I scan my couple hundred stocks that I have, and you're right, other than gold and energy, there wasn't anything that looked like it was bullish, right? Anything that had much favorable to the upside. So I completely hear you, and I think your approach serves you well and makes sense, right? You want to see what the trend is and go with the trend. But for me, on some of my positions, especially the ones that I want to build positions in, I am going to take a shot that Amazon's ready to rebound, that Microsoft is going to have for 4 quarters in a row now, maybe one of the best earnings reports of all time. So I'm looking forward to that. If Microsoft sells off, I'm going to be there to buy some more after they report earnings. I might not do it in the after hours. I might wait till Wednesday morning or Wednesday after J-PAL speaks, or Thursday even, to see what Apple does. But if Microsoft sells off after its earnings, I'm going to add to the position. And it's not from, me trying to catch a knife. It's just like, I just want to add some more weight into positions that I want to be in for sure long term. And by long term, I mean years and not weeks or months.
For sure.
I don't know, GP, what do you got to add to that?
What's that?
I don't know. What do you have to add to our philosophical views of how we want to view this market and our investing?
I think I think pragmatism wins in markets. You have to be pragmatic when you're taking these trades, and it's quite irony. I think someone just asked me what to do in the markets, or like, where do you think it's heading? And I was like, I don't want to have that conversation with you or anyone else, for the mere reason that most of the time in the past, and he's like, oh, no, I'm different. And I'm like, okay, fine, maybe you are, right? Most of the times in the past, that when you tell someone what you think is going to happen, you'll have a conversation, and then it'll usually end with, let's see, right? Because the disbelief is just not, it's just normal, right? This is why trading as a full-time trader is a lot harder for me to tell people about it, because they think they know they're investing and they know what to do, and that's fine. That's not like, if you're asking me and then you're going to ignore me, I'm not going to spend more time having that conversation. So I think everyone, it's their own money. They got to make their own decisions. From a market psychology perspective, if you take a trade, not an investment, but if you take a trade and the trade goes against you and you don't take your stop, then what are you doing, right? It's like, let's take Netflix, for example. Reed Hastings in 2011 decided to spin the company out to Quickster and whatever. Within months, I think, he realized it was a really bad idea, and he changed his tune, right? So if you take a trade and it's gone against you, and you don't take your stop, or if you don't change your tune about what's going on, then you're ignoring all the telltale signs. So you have to be, especially in a volatile environment like this, that you have to be pretty matter of fact. It broke 360 or 370 or whatever, you need to get the hell out and then live to fight another day, right?
Yeah, and I think that's a, you'll see me post a lot of time, you have, a trader needs to be nimble, right? But a trader also needs to follow what they have in place, right? If you don't have a plan in place, you're just out there sort of spitballing, and then that often turns into an emotional decision, I find. So, I'll take Moderna again, right? 162 was my spot, right? Now, if I didn't actually have a stop in, it may have been harder for me to sell out at 162, right? But because I already had planned that was the spot,
Yeah.
I just liquidated the position, right? So I'm going to use that cash elsewhere, take my loss, and move on. But at the same time, that requires some type of discipline. And I'll be quite frank, in my trading account, in my options trade, I don't often have that same discipline that I do in my long-term account. Now, it's two different mindsets as what I'm trying to do on a day or a swing trade, as opposed to what I'm trying to do when I set up an investment. That doesn't mean I don't trade in my long-term account, but it's not my trading account, right? Like I definitely understand the two different things in the two different mindsets I need to have. But because I'm not as used to being a trader as I am just at someone who adds two positions normally, that can be a challenge for me to overcome. But I think, from what I see people reply to me, and maybe even that person who reached out to you, GP, about what the market's going to do, they could very well be in a position that they're holding on to because they never had a plan other than the stock is going up and now it's going against me and I don't know where to get out, and I hold it, now it's down 10% and now it's down 20%. And if it's on option, right, now it's down 60, 80%. And then that's how you blow up your account.
Yeah, I mean, I think that's the majority of people. They want to be told what to do, what to buy, when to sell, all that,
But they don't want to. So that's like going.
Yeah.
I don't know. That's like going to a lawyer, and the lawyer is spending, I don't know, 10 hours telling you what exactly you do, and then you do nothing, or you do the complete opposite. Then what was the point of spending your money on the lawyer? What was the point of doing all that stuff, right? So everyone builds their own roads, and their dreams and stuff are attached to those highways. They can figure it out. I've already spent way too much time with too many people to spend time having that conversation. If you're willing to listen, I'm great.
Yep.
I'm having that conversation with you, and that's why we're sitting here today, right? So
Right.
It's interesting from a psychology perspective that you just you buy something as an investment and it goes 75% against you. Is it still a valid thesis? Is your question, right? Is it still a valid conversation? Oh, the market's telling you maybe not. Maybe it is, maybe it isn't. So
No,
I'll give you one of my best examples. Mine is Tesla. I bought Tesla first time, I think, in 2013 or 14. I was a happy shareholder and watched it go up to 380, 390, and then all the Elon hijinks started, and I'm going private, and we saw it take a 60% haircut or a 50% haircut from all-time highs. And internally, I was feeling a ton of pain, and I was like, oh, what's the difference between me shareholding from 2014 to 2019? I could have bought the same price, right? It felt like this whole emotional conversation of, well, what's the point of being a loyal shareholder? You're going to get opportunity to go buy it cheaper in like 6 years anyway, right? And I was like, oh, I should sell off. I even had the conversation with my wife, and ultimately my thesis was these cars change the world. It hadn't changed. So instead of selling, I actually added, right, in that conversation when it retested the 180 level. And it was one of the most brilliant ads ever. It happened to work out. I'm happy and I'm fortunate and I'm grateful for it. But it was the same emotional conversation. Was the thesis still intact for me? Yes. So what's happening? The price action is getting smoked. Okay. So you have a $23 billion company that's being valued at 30 or 29 billion at the time. Do I think they can continue to grow? Do I think all of this stuff is going to happen? Yes. So I stuck with the trade and I added. I think a great book that I read, actually from Common King, he recommended it. It's called The Art of Execution, right? if you own a stock and you've seen it come down 50 or 60% and you're not adding, then why are you even holding?
Right.
Yeah, no doubt. Absolutely.
Like if you're not, you should be out. You should take the loss and move the hell on and call it a day. But if you're holding for 50, 60%, it may or may never come back.
Well,
But
Yeah.
I think there's 2 points that I'd just like to add there. One is, for every Tesla of being able to come back like it did, there's another dozen or more General Electrics, right? That all of a sudden it's down and it's barely trying to tread water, or, I mean, I don't want to get into the meme stocks, but it's in my opinion, it's very unlikely that those stocks ever reach their highs again. They could.
what was the thesis? What was the thesis on that? That it's going to be a short holding cover over time? Like that's not really a thesis for investment. That's a thesis for trying to catch people off guard.
Yeah,
right?
for us though, like we have more thoughtful thesis or reasons why we get into a position. I think a lot of the questions I see is people are buying just because it's going up, right? And now that it's going down, well, it's down 70% or whatever. How does this recover? In my mind, it doesn't. But in theirs, it's like, well, it's going to come back, right? I posted, I don't know, a couple months back, the picture that some people like to use of, the two diggers, right? There's a digger on top and there's a digger on bottom, and one quits, and you see, inches or feet away is all the diamonds, and the other guy just keeps digging and getting to them. To me, that's more of an illustration of willpower and overcoming things you have control over. You don't have control over just to will, GameStop back to its all-time highs or higher. You don't have the will, right, just to positively think about it and be determined as an individual investor to make Bitcoin reach its all-time high, right? You don't have the ability to do that. And the other point that I wanted to make previous to that was I look at longing a stock, and I forgot who it is that says this, that they're on, Fast Money on CNBC, but basically if I'm long a stock, it's like I'm buying that stock every day. Like I'm willing to say, I would buy this stock here, I would buy this stock here, right? And I look at Amazon and Microsoft in that vein. Like, why would I not want to own more of Amazon and Microsoft? Do I hope it bounces here? Yeah. Do I know it's going to? I think it might, but I don't know that. Am I willing to buy it lower? Yes. Am I willing to buy it higher? Yes. Right. So I think we have the perspective of knowing why we're getting into something, as opposed to, oh my God, it made all these people on Reddit or all these other people on stock twits or wherever all this money, and it's doing nothing but going up. So that's just, I think the difference.
I sometimes forget that people are out there doing that, like other than seeing like some of the guys chirp on Twitter, like I'm not connected enough to realize that there's people out there that just throw money around without really having a plan. Look at your account like it's look at your account like it's your your bank account or your dollars. Like, you want your dollars worth more tomorrow than today.
Well, I think this also comes to the gambling part of what this is.
Oh yeah.
Some people see this as a way to make money quickly, and it's also a way to lose money quickly. And I think that also becomes, working without a plan falls right into that. Like, you're not making a 7-leg parlay for 20 cents here for, $100,000. You're making you are putting significant capital in, whether it's through options or through common, that almost like a football game. You have no way to predetermine what the outcome is going to be on a given day. But the difference is the amount of size people are putting into this. And, you don't really double down on your losing parlay, right? Because you think that certain investment that you're making or certain trade that you're making is going to go up because you think it's going to go up.
Yeah, I think what you'll also not realize, but I think what market psychology also tells you is that most people, when they have an idea, don't bet the farm on it. They bet a small amount, right? So there's very few people who did what, if we're talking about GameStop, Roaring Kitty, right? I think he put his entire net worth, like $250,000, and everyone else who didn't necessarily believe or thought it was a possible, kind of made sense, put in maybe $1,000, bought 100 shares, or bought $2,000 and bought 200 shares, whatever the amount was, right? And they saw it go up, and they're like, "Oh my god, oh my god, oh my god!" And they sell some, but they never put their entire. They end up putting more money in towards the top than they do at the bottom, right? So when it reverses back on you is all these people who have made money. And I can tell you, there's very few people out of every crash that have cashed out big amounts and held it, right? And one of the names that always comes to mind is Mark Cuban. You know why Mark Cuban's a billionaire? Because he sold his now bankrupt company, broadcast.com, for $6 billion at the top. That's why he is a billionaire, and he's maintained it. He's a great dude. Don't get me wrong. I don't have anything against him, but he knew when to cash out. He didn't go right back in and say, let me go buy, I don't know, broadcast2.com, right? Like, he took his money, he stepped to the side, he waited for the market to kind of do its thing, and then he came in and he built his own empire out of that, right? There's very few of those, and there's a lot more of the, I sold at 5-6 billion, but then it dropped 20%, so I bought 3 billion, and now you're down $3 billion, and you know what I mean? Like, it's
3,000, right? Well, I mean, let's talk about it in our terms, or people who are listening to this. I mean, $3,000 is a lot of money to a lot of people, right? And whenever let's just use Roaring Kitty as the example, who did an impeccable job of timing his entry, but had that gone against him, no one would have ever known who he was, other than he made this ridiculous and ostentatious bet on a company that got short squeezed to the levels it did. Not everyone can do that, and I'm not going to say that it was pure luck on his behalf, but it took a substantial amount of luck for all that to play in his favor just right.
Yeah, and when he was up like 15 or 20 million, he wasn't selling. I was like, what is this guy doing, right? Because you took a $250,000 bet and you made it into millions, or whatever the amount of the bet was, and you made it into millions, and you're not taking any off because you have this grandiose agenda of where things are going to be in 5 years or 3 years or whatever your time frame is.
So do you want to bet on luck, or do you want to bet on probability? I mean, is what it really gets to. And I think that's why we look at charts. I think fundamentals are great, and I think people can look at fundamentals and get a really good idea of what a company is doing and should be doing in the future. I think fundamentals are an absolute part of a long-term investors. It should be part of their toolbox, right? It should be what some things they look at. But from a technical standpoint as well, we are the three of us are looking to enter into trades and or investments at specific points. And do they work out all the time? No. But do we try to look at them and do them in a way that, from what the chart is telling us, right, from what the data is telling us, the most probable way? It's not just based on, it's gone up for 7 sessions straight, let me go all in on some call options that by next Friday it's going to be up another percent. Well, that's that's harder. It's easier said than done, right?
Yep. So I gotta sign off in a few minutes. But I just wanted to share a few charts.
Yeah, that'd be great, GP.
Yeah. So here's, I think the one I'm sharing right now is just the Amazon trade that I took on Friday. I know it's catching a falling knife, and I know it's not the smartest of trades. If it gaps down 10%, then I'll take the loss. So it's what it is, right? Ultimately, the way I manage this is not taking full position. I take a smaller than desired position. And then, so if it does work against me, I'm not out too much. But the reason I decided to take the Amazon trade on Friday was just, I was looking at NVIDIA. NVIDIA is one of the charts, but even Amazon itself, right? So if you're looking at this chart, we had a pretty decent consolidation here. You had the failed breakout here in 2020, came back, retested the bottom of the lows, closed below there, right? Just like we had here, that we had a close right below the box level, and then we took off to the upside. So my thought process on taking this trade was, yes, we have a close below the box. I wasn't in any position, so I didn't have to take a stop. So I was looking for potentially a kind of a January UpX straight down move and break of 2871, and then we reverse to the upside. Maybe, it doubles from here or triples like it did last time. So that's part of why I took this trade. And potentially, if this close below equates to a further move down to here, I think I'll be able to get out between 2,800 right here and 2,630 right here, which isn't terrible on Amazon. It's a few hundred points, but like I said, I manage it between position size. So the reason I take this is, for many years we've seen these box breaks happen. You saw it here in NVIDIA box break, and then it just took off.
Yep.
Amazon box break. Maybe the environment is different and it's changed and it's not going to happen again. And I'll find out tomorrow. It'll be a quick one day beating, or it'll be glorious. So I was happy to take this.
Has Amazon announced earnings yet? I don't remember if I saw that one. I know it's not this week.
No, it's usually February 2nd, right? So our first week of Feb. It's usually the last day in January, or the first week in February. So I don't think they've announced that, but according to this, it says
TradingView has February 4th. So
this has February 3rd. So
so nobody knows yet. I don't think they've announced officially.
So I just took the trade, and we'll see what happens. So that was one of my trades that I took, and maybe I'm wrong. I'm okay with it.
Market Smith says February 3rd.
Okay. And so the other trade, not the other trade, but the other chart I wanted to share was the one that I was sharing with you guys earlier, which was a comparison of the big move down in 2020 and what we're experiencing now. I'm pretty much in the camp that this was a market dynamics conversation and not a
Fed rates.
Like a rates conversation, the narrative that's going on. If you saw rates on Friday, they took a gigantic crapper too, right? Like, it's not like the 10-year was down almost 5% on Friday, and we still collapsed. So if your narrative was true, we'd have the 10-year keep going higher while tech is collapsing, right? So my general thought process is this is market dynamics and dealer positioning and gamma squeezing to the downside. So I wanted to kind of take a look at the charts of the last time we experienced this, which was COVID 2020. You'll remember in COVID 2020 collapse, it happened after the February OPEX, and it lasted until the March OPEX. And after the March OPEX, it took off, right? So the big conversation that happened was, I think it was on Thanksgiving, so post November OPEX, right? You had and COVID was around in January as well, and it wasn't until end of February that I decided to collapse. So thinking about it from that perspective is, we had J-Powell come out and say he's going to increase his tapering in end of November, which is right here where he kind of market topped. And I guess the market wasn't prepared for that. So you had some ups and downs for a little while until the December OPEX. And then after the December OPEX, it kind of just literally just started coming straight back down, right? You see here into December OPEX it popped and then it's coming back down. So what I think here is potentially we had on Friday a March OPEX type move. And what I'm watching for this week is tomorrow, hopefully a similar candle like here. We have a gap down below the pivot, the recent pivots here. And this was the recent pivot at that time. This is September, I think. Yeah, this is the September lows. We have a gap down or a push down below the September lows. We try to reverse up and ultimately end up in a indecision candle, right? And that would be the first kind of indecision candle since this kind of topping candle up here, right? So that's
so
what
you
I'm
heard
watching.
it here first. If the market drops tomorrow and is has any legs in it at all, go all in QQQ calls. GP's calling it right now. This was the first step to get on another 2-year bull run.
I don't think we get the 2-year bull run. I'm looking at, so no, just to be honest, like I'm looking for so this was the bulls saying uncle destruction here and looking for one more kind of big move out to say I think you said it at the beginning of the conversation until when every last bear turns to a bull.
Yep.
Right. So that's my thought process here is when every last bear turns to a bull.
Every last bull turns into a bear. Yeah.
Yeah. Well, that's what's happening now. But I'm saying we're going to see a rally where every last bear turns into a bull, and then that's where you start to kind of ease out of most positions. But hey, if tomorrow's candle looks exactly like Friday's candle, which looks exactly like Thursday's candle,
sell it all.
I can tell you that this is not the same, and you should be really worried about your positions, and you should think about raising some more cash if you haven't already. That's the way I'm viewing tomorrow. I see it as a critical day in terms of direction, gap down, reverse, gap down, and just trend down, or is there more market dynamics, or is this actually fundamental selling? So that's what I'm going to be watching for.
Good stuff, GP. Thanks, man. We really appreciate you hopping on, and
appreciate it. Sorry I couldn't stay longer. You guys have a good.
Yeah, all good. Nick and I'll keep it up for the next 10 or so minutes, and we're going to peace out too. But thanks, brother.
All right, have a good night, guys.
See you, man.
Nick, what do you have?
I don't know, man. My focus right now is kind of on the GLD and the miners, just because I think they look the best. I don't know. I'm just not, like I said, I'm not really in a rush to really do anything. So I really haven't really been at my desk a whole lot. Been out skiing with the kids and, doing that kind of thing. But, like this is kind of like from a technician standpoint, like this is kind of where I like to use fibs. Because it'll kind of give me a general idea of like where I think price is going to gravitate towards. And I love using like the 50%. So like, just looking at the spies, whether you're.
Well, maybe if you can pull up a chart and show us what you're meaning with your fibs.
Yeah. That working?
Yeah.
So, just again, kind of to my point earlier, we have a chart of the SPY here, and we have this kind of this long range. And You know, I'm kind of a napkin technician. I don't need things to be exact. I just want a general idea of like of direction. And so looking at this, whether you draw your fibs, you know, you could throw your fibs from here, you know, from this high breakout, just saying that this broke out, it failed, it retested the lows, came back up, you know, went sideways. So you could really measure from here, or if you really wanted to, you know, you could measure from, you know, here or here. But either way, you're going to get the same kind of, the prices are still going to be in the same range. Looking at the spies.
Hey, if you don't mind, real quick, Nick, I know
Yeah.
fibs can be, you know, confusing to some people. They may not understand how to draw them or how you're drawing them. Can you just give us a real quick of an explainer of how and why you drew that the way you did and came up with those levels?
Fibs are, shoot, you know, like you'd have to read a book on it, you know, like as far as how they came up with these mathematical, like how they came up with the numbers.
Yeah, and
Fibonacci is just,
they come up in nature, and there are all different kinds of reasons why
yeah.
these play out the way they do. But just why you draw them the way you do, or how you draw them,
Oh,
I think would be helpful.
I prefer to draw them from like where I view major turning points. So let's say we're looking at the S&P here. You know, this is kind of where I think the range is, you know, from this basically 300 to like, let's just say 240. 240 to 300 is kind of your range.
So you're not necessarily looking for the low tick, you're looking for the low range, basically, or, you know, the low
Yeah.
several.
I want to, yeah. Largely just being that, like, when I look at a chart like this, when I see a stock in a range, like I'm thinking in terms of energy, like energy is building to bust out one direction or the other. And so, you know, as price moves up here to the right, I'm still looking at this range, this 240 to 300. And so price broke out. When price breaks back into a range, you might as well just assume that the low of the range is going to get tested, which it did. Broke back out, or broke back up, kind of V bottom up here, and then we kind of put in this like mini range here. So that's what I'm saying. When I draw fibs, I like to use what I view to be like major turning points. Like you could probably run fibs from here all the way to here as well. You know, from high to low, from breakout to high. Again, like, I don't know. I guess that's just kind of my preference.
Yeah, no,
I don't know.
I don't
Over
want
the
to get
years,
sidetracked. I just know some people who might be trying to, you know, listening to this and might be trying to chart and use Fibonacci levels or retracements.
like,
it could be intimidating to hit that tool and not know where to go or what to do, right?
so yeah, sure. Then I got a good kind of point to that. Like, if there's one thing you take away from fibs, it's the 50% and the 0.382. A 50% retracement in any trend is healthy. Like if you see a 50% retracement in any type of like up move, like that's perfectly healthy behavior. And why I was saying 50% is kind of right around that 400. Oh, actually, no, it's not. I'm sorry, I was measuring from down here, I think. So back from this 300 range, right around 400 is basically at the 50%. I mean, it's 7 points off. The 0.382, if you want to see any type of high type flag action, price has to hold like either the top 25% of this up move or the 0.382. So again, you can look at these fib numbers as a way of gauging strength. Like, you know, if price holds above this 0.23 or above this 0.382, like stock's pretty strong. You know, if it pulls back to the 50%, it's still normal. 0.618, I don't know. I know guys that like to trade off it, but it's going to be a little bit deeper of a pull in. And then, of course, you know, if you're not going to round trip the trade, I guess some people might, but so again, like I totally just started ranting. I have no idea about what, but my point is that I like this 400, 420. We're really not that far off, you know, from there. All it like it'd be great to just see like a big old puke bar down and then, you know, a wick back up.
Yeah, I mean that would be reminiscent to what happened in, you know, February, March of 2020, right? Like you finally
For sure
break all the rules and you get those big puke bars, and then anything can happen. You know, just looking at SPY and the ES is what I mostly look at. Not that I trade it, but I look at it to chart what I think the S&P is going to do. I mean, it's you know,
and maybe
it's not hard to imagine that we're closer to a bottom that could set up for a head and shoulders pattern, which, you know, everybody and their brother, if they squint their eyes hard enough, they can make a head and shoulders pattern out of something. So I'm not going that route, but we could absolutely be getting close or starting a bottoming process to see some type of relief rally to then see a potential downside move.
yeah.
But we don't know. Oh, that's you know, we're just speculating on what can happen. And
I mean, it's pretty likely that we test this for, you know, mid 420s, 430s. I mean, that's a logical area that it would bounce, from right there. You know, pretty much wherever you want to throw kind of one of these trend.
Absolutely. And you know, I know you don't like, you know, using the term bullish or bearish, but right now and as you explained, you want to be involved with the trends, and the trend is definitely with a bias to the downside. I don't think there's any argument to that. Similarly, I want to share my chart real quick and we'll wrap up with this one.
Yeah, man. Oh, I gotta stop sharing this.
That's okay. Now I got it.
Okay.
I have control. Hopefully,
she said.
Hopefully you can see that it's my Bitcoin chart, and I removed all the lines. You know, I'll flash them up there real quick, but I removed all the lines just because I really think it's this simple. And I got the Ichimoku cloud up there. I rarely use this. But I saw someone on TikTok, actually Bare Naked Crypto on TikTok, you know, uses the Ichimoku cloud, especially for Bitcoin, to tell when, you know, Bitcoin might be in a, you know, bearish cycle or entering a bear market. And I think it's valid. I like the weekly 21. That's the, you know, the green line that's in there.
Sure.
But anytime that Bitcoin's price has broken through the bottom of the Ichimoku cloud, he says it's in a bear market, and I don't think you can disagree with that. I think for my use of the 21, it may take a little bit longer to get on the positive side of the cloud than it does the 21. So you know, for his take was that, you know, you need to be on the right side of the cloud to be bullish, and you need to be on the wrong side or the bottom side of the cloud to be bearish. And I really think the 21 EMA really encapsulates that well, because I would much rather have gotten out of my positions here than waited till you got here, right? And not that it's that big of a difference, but then this is confirmation, and the same thing on the upside, right? You get in back long here or up here. I think it's pretty easy to tell probably where you would have rather been there, but with these two indicators combined, I think it shows a really good inclination of where Bitcoin is going. You know, I think I was, you know, telling everybody and their brother in this area right here, as we came into the $10,000 mark in 2020, like I'm buying, and it had nothing to do with the Ichimoku cloud. But I saw how the markets were doing, and I saw that this drop right here, right, the COVID March 2020 drop wasn't really it was a black swan event, right? It was more
Yeah.
an exception than the rule. Now, did I foresee the march that we were going to go on for the next 6-7 months? I've said Bitcoin to 100K for a while, but no, just to be honest. But if we look at where we're at now, we crossed across the 21 last week of November, and now we've broken through the Ichimoku this week after all this selling. And I mean, it could still be saved. It could go under and pop back up, but I think it's unlikely, just based on how the 21 is still rolling over. We may get at some point a pop to 47, 48. That wouldn't surprise me at all in crypto, but similar to what your thesis is, right? You want to be trading the trend, and there's no doubt, and we can go to a daily view, that the trend is not bullish. If being below the 21 EMA weekly doesn't tell you you're bullish, it's bearish. And Ichimoku cloud doesn't. I mean, look at all these EMAs on the daily. I mean, we are so stretched. Yeah, again, we could bounce back up in some time frame up here into this 46, 47, 48 area, but it just seems like you're fighting the trend to me. But anyway, that's
I mean, it'd be real pretty if it just held that 30K, kept a nice range between 30 and 60K for however long. I'd set up a nice looking base.
Yeah, I pointed this out earlier, and I think Les on Stock Twits had an AI comparison that he put out there that somewhere between 32 or something like that and 28 he had as his area. So we're talking like right through here, basically this area. Could be a catching spot, and it absolutely could. And I've seen anywhere from people saying we're going back to 50 down to 19, and all those. I mean, I'm not dismissing anybody's TA, because we all get there at different ways, and they're often well thought out. All I know is the bias is to the downside. I'm not making a price prediction, but if we look at 2021 earlier in that year, right, from May to July, we haven't even tested those lows yet. So no. I think that area will be next to be tested. And looking at my chart, that's where I have things wicking off of from the previous. That line no longer needs to be there, and we've broken this line, which I had as a support, isn't proving up. So would it surprise me for it to get in here? No. So I think Les's take was absolutely spot on. I don't think we're going straight to 19 or below, and I don't think we're going straight to 47, but something like a move similar to that makes more sense than just that to me.
Oh yeah, totally.
Or where we're at right now, that to me, right? Like I don't think that makes a lot of sense, and I don't think that makes a lot of sense. So something like that is more likely, in my opinion, than the extreme bulls and the extreme bears out there. But something like this, right, can absolutely happen for an indefinite period of time. And I do think if Bitcoin happens to tick under that 30,000 mark, you're probably going to see, some capitulation. So, 27.
And maybe we get Maybe we get Bitcoin 22,000 in 2022.
We very well could. We never know. All we can do is make the best probability off of what we see, right? So anyway, that's my take. That's the way I'm looking at Bitcoin and crypto right now. Hey Nick, I really appreciate you, man. I appreciate you and GP hopping on. I think these are awesome little conversations we have. I mean, we've been on for longer than an hour now, but the time just rolls by and we have such good conversations. So thanks, man. I really appreciate you.
Yeah, totally, dude. Have a good night.
Yeah, you too, brother. Take care.
All righty.